Okay, the improving rate environment is breathing a bit of new life into insurers. And joining us right now is Roger Crandall. He is Chairman, President, and CEO of MassMutual. Good morning to you.
Good morning.
Are we right? Are the rates because they've increased, but it's only been marginal?
I was just going to say, when 2.2% on the 10-year is an increasing rate environment, it tells you kind of where we've been for such a long period of time.
So that's not,
we wouldn't mind seeing slightly higher long-term rates.
I would imagine.
Mind seeing slightly. I mean,
as would everybody else.
It's a huge issue for the insurance industry.
And all savers,
yeah.
right? So for the pension funds as well.
Are there products that you have not been able to sell or you have effectively tried to get out of as a result of where interest rates have been?
You know, there are a whole series of life insurance policies that have guarantees embedded in them, and
right.
We're not willing to bet our policyholders' capital on rates going up in the future, so we're not doing what's called mean reversion pricing. So there are some policies where our premiums are higher than others, hence we're not selling a lot of those kinds of policies.
And that's because you don't think rates are likely to, I mean, you don't think it's likely, or you're just not willing to bet any money on it?
You know, we look at where the capital markets are, and it's to bet against the markets is
Crazy.
Not kind of what we do.
So when you look at your competitors who have products like that, do you say to yourself, 20, 30 years from now, they're just not going to be able to make the payments?
Oh, no. I think the life insurance industry is a very financially strong industry, but if you just take a look, you've seen companies have to take reserve additions
right.
because of pricing decisions they've made in the past. So we're trying very hard to be honest with ourselves about where rates are today. So the biggest product that we sell is permanent whole life insurance.
Right. We were just talking about whole life during the commercial break.
We have our dividends that are a little bit different than other companies because we don't just own a portfolio
right.
of bonds, we own businesses. And those businesses help us pay a better dividend
right.
to our policyholders.
Can you just make the case for whole life just for 1 second for the audience? Because I'll tell you why. I had a conversation once with Warren Buffett about this, actually, and he said, term life yourself, and then hopefully you'll, at some point in your life, you'll get to be able to be self-insured.
Yep.
That should be the goal.
Meaning right. You have enough money that you don't need insurance to cover it.
So the richest person in the world is, in fact, self-insurable, right?
But the rest of us?
But for most people, the ability to have instant liquidity at a time when your family needs it, you may have an estate tax obligation that may be needed. You may own a closely held business, so you need to kind of think about the transfer. But most importantly, term is wonderful for getting mortality protection when you're young. It's very inexpensive because the chance of dying young is pretty low. The day the term policy expires and you still want to take care of your children or grandchildren or your wife or your husband or your partner, permanent insurance has a real place. The earlier you buy it, the lower cost it is. Right. Because you're simply spreading that mortality cost over a longer period of time. Our sales of whole life insurance were up 24% in the first 6 months this year. We've grown at a 15% compound annual growth rate for 11 years.
There's a way to do it where you don't get ripped off. Right. And I mean, the perception was for years that whole life was not economically viable. But you can do it now where even if you, and I'm talking about like a second to die, even if, we said this off camera, if you lived to 94, you're still getting a 3 or 4% return on
right.
on what the policy is
but
actually
how many
worth.
people are? How many people?
You don't want term life to pay off. Like
no,
that is true.
There's times where I'm like, I don't even want any freaking term life because I'm not even admitting the possibility that it's going. I mean, it's like the worst thing in the world. It's like that's my benefit.
Yeah, but we have kids. Everyone.
I know. I've got it.
Right.
I get it, and I've got a lot of it, but I hate it.
So this is why you work with a good financial advisor. And MassMutual's really interesting, right? Policyholder-owned company. So we have one alignment. It's a very long-term business.
But on the whole life policies, how many people are now, especially given the lack of savings that people have in this country, where they're actually coming back to you and saying, actually, I need that money?
Yeah, one of the great things about whole life insurance is it builds cash value that you can use. So we have something around 11 or 12% of our cash value has been borrowed, and that's what it's supposed to. It's a whole life policy.
Right.
It means you need to send your kids to college, you can borrow some money. We've had great American businesses. Disney was an example where the cash value in a life insurance policy helped get that company going.
Roger, what did the insurance companies do years ago that gave whole life a bad name? What did they do? They didn't give competitive rates. They tried, the commissions were too high, or they did something, because it has a really bad rap.
Again, you go way, way, way back, right? Yeah. When Volcker pushed up interest rates, and portfolio products were yielding lower than short-term products, people borrowed against the cash value and put it into money market funds. So that was one thing that kind of structurally changed how the industry worked.
Did insurance
so if rates
not
were to go up sharply again, would you be in a bad position if you were in one of those?
You know what? We got religion about asset liability management like every other financial institution, so we're much better now at matching our assets.
Can I ask you about underwriting? Because one of the other things that's happened is technology. Even in the last 12 months, 24 months, so much of the underwriting is now being not just done by a human being, but also you're being helped in large part by algorithms and AI, right?
Yeah. So MassMutual's invested a lot to disrupt the manufacturing side of life insurance. And by the way, no normal person thinks about how life insurance works until you have to go through the process. To take 20 or 30 days to have someone show up at your house and put you on a scale at the start of a process that goes downhill from there. We want to change that. So this past month, 3 out of 4 of the policies we underwrote went through machine underwriting without having to have an underwriter
What does it mean?
involved.
Machine underwriting means what?
It means we are using algorithms to underwrite mortality so we can issue policies in a day or 2 versus
So
in
you don't
20
need
or
to come
30.
do the health check on me. You can figure out
If you-
statistically what the odds are that I'm going
Correct,
to die.
especially if you are younger and healthier. Big policies, older people, I think we're going to have more human underwriting for a long time. But the whole push to using artificial intelligence and machine learning and everything is coming to our industry as well.
There's another issue, though, around privacy,
Yeah.
which is to say people are now using these services like 23andMe and all sorts of other things where people are taking their DNA
Yeah.
or Ancestry.com, whatever.
Yep.
Are you using any of that data yet? Will you be?
We are not using that genetic data. It
Right.
creates an issue that there may be asymmetry of information. You know more about your health through a genetic test than we're allowed to find out. So we worry about that because, remember, ultimately all of our costs are spread among all of our policyholders.
Right.
And I'm going to buy a big policy if I find out something in my genetic.
Well, so this is a big issue, right?
It is-
the individual legitimately may know more than you. This isn't about not reporting that I went to the doctor, right?
Right. This is an evolving area, and frankly, like in a lot of places where technology is advancing, the legal system and the
Holy cow.
regulatory
In
system
other
may not
words,
have caught up.
folks, if this is something that applies to you, get your policy now because it sounds like you guys are going to be tackling
Well,
this. in the
it is something everybody has to worry about.
I can't imagine that for a big policy you'll ever not need a physical.
The question is how big and what the person's health
Second to
situation
die,
is.
big millions of dollars.
Look, we are currently up to age 59, up to $3 million. We are going through algorithmic underwriting, and if you are healthy, because
Up
we're
to
able.
3.
So but it was for us. It was $1 million just 6 months ago.
Right.
Roger,
so things are moving quickly.
The growth rate that you guys have in terms of signing people up for life insurance, is that due in part to some of the online stuff that you are offering people?
We're hitting on
Kinda
all
like the Geico
we're hitting on
method?
all cylinders. You may recall a year ago we purchased the distribution business from MetLife when
right.
they broke up. So we've grown from 3,700 agents to 9,300 agents in the last 10 years. We've grown our sales at about a 15% compound annual growth rate, so we crossed 700 million in sales for the first time, becoming the biggest seller of whole life insurance in the United States. We're technologically enabling those advisors so that they can work more quickly with folks, but we're also selling direct for the first time. You can go to massmutual.com and buy a term policy, one of these machine underwritten policies. 30% of our policies by count actually have come through non-agent channels for the first time. Tiny percent of premium because they're small policies. And you can buy life insurance at work. Our 401k business, which has also doubled over the last decade, gives us an opportunity to talk to people.
Very quick business questions. You sold your Asia unit to this Jack Ma group.
Yep.
Why?
We bought the company in 1999, and it had been very, very successful, but we see technology changing really everything in that region, and the opportunity to not just sell it, but take back an equity stake in Yongfeng Financial, the public company that is buying the majority of it, lets us participate in the wealth management business in China, and we think that is a tremendous platform for growth over the next
And then the
decade.
last question, I feel like I ask you this every time we see you. One of the great marketing pieces of MassMutual is that it is a mutual company, that it isn't a publicly traded company, and as a result of that, that you don't have to necessarily get the margins that somebody else might, and that as a cooperative, I get to participate in that to some degree. Cooperatives have, in the past, over the years, turned into publicly traded companies. Will there ever be a day where you will?
We have no intention whatsoever at this point of becoming a publicly traded company because we think this alignment of interest between policyholders and the company is really strong. It would take a massive change in the regulatory environment or the tax environment for that to happen. We like working just for one set of constituents, our policyholders. It's worked well for 166 years. Another 166 would work for me.
We'll take it. Roger, thank you for coming in this morning.
All right, thank you very much.
Great to see you.
Appreciate
Thanks.
it.